The moratorium on Yes Bank is likely to end at 6 p.m. tomorrow, March the 18th, just days after it was first put into place. Truly, the rescue of Yes Bank from the mess has been quite something. A complete rescue mission mounted by the Reserve Bank of India, roping in for the first time private sector banks along with public sector behemoth State Bank of India. In fact, to put out a feel-good message, there was a press conference held in Mumbai today with the new man in charge, Prashant Kumar from Yes Bank, addressing the media. There was also the State Bank of India chairman. We also had a whole lot of private bankers coming in to talk about how Yes Bank will truly be revived. But the true test will take place tomorrow, won't it? Once the moratorium lifts, what happens then? Will retail depositors continue to have faith in Yes Bank? Can it be revived? And what are the lessons from Yes Bank which point out to some challenges in the larger banking sector in India? I'm going to talk about all of this now, but before we move ahead, let's play out for you what Prashant Kumar said today.
Feedback which we are getting from the ground, not only from our staff but from the customer also, they say that absolutely they don't have any apprehension, they don't feel any need to shift or withdraw money more than what they required in their normal course of business from the bank. So that itself is a huge comfort. And if I give you a data, last 4 days, we were having higher inflows than the outflows. Only 1/3 of the customers have withdrawn to the extent of 50,000.
Well, so is that good news in the offing? Can Yes Bank pass its truest test, which actually more than getting the funding on board, because this was pushed by the Government of India and RBI, actually retain the confidence of its depositors in the banking system? To speak on this, I have with me today Deepak Shenoy, founder of Capital Minds and author Puja Mehra. Great to have both of you on the show. Always a pleasure to speak with you. Deepak, I want your take first. I'm sure you watched that entire press conference today and some tough questions that the new management at Yes Bank had to take. But the biggest one, of course, is whether depositors will continue to have faith, and should they truly, in your view?
I think firstly, if depositors don't have faith, what happens? So there's roughly, I think, roughly 70,000 crore of retail deposits, roughly 70,000 crore of corporate deposits. There is likely to be deposits from the banks that have invested that will help them tide over any temporary deposit withdrawals. There's also talk of, RBI specifically clearly mentioned that there will be a complete line of liquidity provided. So in case there are even more withdrawals than the liquidity that's provided to them, there will be more liquidity provided, more money given by the RBI as a temporary measure to be able to meet deposit needs. So I don't think depositors need to worry about money coming out, and that's a confidence raising measure, because essentially it means that at least from the RBI perspective, there may be a temporary mismatch of liquidity, but the assets that they have, the loans they've given out, are reasonable enough to be able to pay back any of the depositors in the longer term. So the second part, of course, is should depositors take them out? I think if you're really worried about your money in the bank, you should always take out the deposits. But if RBI is standing behind a bank, it's a scheduled bank, even the government has said that they will not let any depositors suffer. I don't think there's need of an immediate panic over here. However, I can only speak for myself. I can't speak for other people. If you're feeling panicky, I don't think it's any statement that I make is going to assuage your fears. But I generally feel that the banking system is safe and depositors will not face any trouble. So my question on should is only primarily based on whether you feel panicky enough, but otherwise, I think I have confidence in the banking system and the RBI is standing behind it.
That's a fair point, Deepak. And the fact is that people are panicking about a whole host of things right now. Most people are panicking about the coronavirus and wondering what happens to it next. So the last thing you need is people panicking about their money. Now, the fact is that the RBI has said again and again, reiterated that it's standing behind Yes Bank. So that's the question about depositors' confidence. It also needs to start expanding its business, lending more, getting back on its feet. Deepak, second question to you as well. Do you really see that happening? How confident are you about the revival of Yes Bank now that the monies have come in?
Well, I think the bank's financials seem to be in much better shape now. They've written off 81 bondholders. They will have a fairly large amount of new 10,000 crores in cash that will shore up their balance sheet. They've probably written off more bad loans than they should have, which gives them the ability to write them back if some of them should return the money in the next, say, coming few years. And also, I feel there is a tremendous amount of, there is a lack of confidence in the name Yes Bank. They should change it. They should change the name. They should go back to people saying this is actually a new bank. It is. The new management has changed. The ownership has changed. So everything about the bank is new. And therefore, they should change the name. They should give it a new name. Go to people and say, this is a new bank. It's owned by SBI. It's owned by ICICI. And the management is fresh. They will be able to raise a lot more. And I think that will work in these times in the longer term. However, things in the with the coronavirus situation, with the situations around worldwide panic right now, I think recovery may take a little bit longer than one would have expected. So you should have a lot more patience than say 2 or 3 months. It'll take a while for the bank to come back.
Pooja, I wanted to get your take on the rescue mission, so to speak. And here, one has to commend the fact that, the Reserve Bank came in on war footing, the way SBI and others were roped in. And so far, it seems like they've got the bang for their buck, looking at how the stock price has been running up. Difficult measures like clamping the amount of stock that can be sold by investors to, they have to hold on to 75% of their stock holding for 3 years. What do you make of this kind of a rescue mission? And would it really matter that this should be the last? Because the banking sector has had a bad run in India over the last few years. And many of these are systemic issues that Yes Bank also faced.
So two separate questions, Tamanna. The first one on how has RBI managed the revival, the restructuring scheme for Yes Bank. Unlike you, I'm not very impressed with the handling of the whole Yes Bank affair by RBI. They had information on the Yes Bank's troubles way back in September 2018 and even before that, because they'd been inspecting its books, they'd been finding divergences on NPA. So they had some inclination, some inkling definitely on what was going on inside Yes Bank. They wanted Mr. Rana Kapoor. They had lost confidence in Mr. Rana Kapoor, and since May 2019, they had a former deputy governor of the RBI on the board of this bank, and yet they could not bring about a market solution, and they had to go in for a moratorium. They had to rope in State Bank of India, which itself has received capital infusion from the government of India in 2018. So I'm not sure this is, given all that was happening in Yes Bank, the ideal rescue plan, a better rescue plan would have been possible. I think the dilemma for the RBI would have been whether to sort of rock the boat and take this decision to suspend the board sooner than what they did, or keep trying to get to let the bank's management get private investors. While they got rid of Mr. Kapoor, they retained the CFO. A lot of people have raised questions about that. So on the whole, I think the RBI could have managed without a moratorium, with a market-led solution, rather than getting SBI and then SBI roping in other consortium partners to rescue Yes Bank. On the systemic issues, I agree with you, and it's difficult to say if if a repeat of Yes Bank is going to be seen in another bank or not. I haven't looked at individual banks that closely, but the fact is that with the whole coronavirus impact changing the global economic situation, India already in a deep slowdown. I can't say, what we should expect for loan repayments going forward, how many more loans are going to go bad. As it is, the RBI in the last report has said that they expect the gross NPA ratio for the entire banking sector to go up. So this was said before this whole new COVID-19 pandemic outbreak. Going forward, I think banking and the capitalization, whereas in the US after 2008, the large banks were recapitalized, and their capitalization position is not as weak as Indian banks Indian banks capitalization is not weak relative to norms, but it's not what it was in 2008. So it is going to be difficult times, for the banking sector going forward.
So how do you really see this panning out? Let me get Deepak in on this as well, because yes, and as we look at the entire saga, and yes is really in two parts. As investigative agencies continue their work, we'll know perhaps in the next few weeks and months if and to what extent there was rot in the system, there was malafide, but it kind of coasted along while the going was good. The slowdown has contributed to the yes mess in a large way, and the entire system is not going to be immune to that. Deepak, what are the challenges and shocks you see coming up ahead? What will you be keeping an eye on?
So I think two primary aspects over here. One is there is a slowdown. In the slowdown, there will be more NPAs. There will be challenge in the ability for corporations to, especially SME and retail, at some level to be able to pay back their loans, especially because of the coronavirus related shutdowns as well. But I think this is temporary, and it's possible that RBI gives a temporary dispensation that allows some kind of forbearance in terms of NPAs to small business and retail. I also feel that interest rates need to correct quite substantially. I think India is at I know inflation, the number that came in was 6.48% was quite high, but it's going to plummet in the months to come. And I think the next number of March itself is going to be quite dramatically lower. And to take cognizance of this fact that inflation is not a risk, and that in fact growth is a substantial risk, I think the RBI needs to start to cut rates as well, and apart from that, there will probably be further forbearance required in order to keep the banking system afloat in terms of not in terms of solvency, but in terms of the ability for them to continue to lend, because it's this one of those times where people may not have incomes but will need credit or working capital just to ride through the shutdowns or the social distancing or however you may have it. That part is a key monitorable. But I think in general, if I were to look at it from a generic perspective, people and humankind has always over whatever threat of disease we've seen in the past. I think we will be quite resilient. We might go through bad times, but we'll come back stronger. You have to have a system that survives, not a system that will die when, and we're in a much better shape in the banking system today than we were 5 years ago in terms of both NPAs, in terms of leverage, in terms of overall exposure, and in loans with respect to per capita income as well. So from that perspective, I'm not too worried that the system will collapse. Europe and America are at much greater threat because we have far more leverage than we are. But we will face a slowdown, so we'll have to ride through this crisis. So from a banking perspective, I think we'll need to see a cut in rates, we'll need to see regulatory forbearance, and we'll need to see banks being extra okay, or extra giving in terms of being able to lend more, provide more capital to small businesses and to retail as well.
Right. Puja, and optimistic words there from Deepak, but I want to come back to yes. and what it signifies today and why so many people are worried about it is also the hope that we have seen the end of the rot within the system. If I were to go back to where it kind of all started off with, it would have been the discovery of what Nirav Modi had done with Punjab National Bank and how it all unraveled from there. At least right now, we hope not to see any more such instances of malpractice in the banking system, which could shake us up. Of course, we've had a PMC in the middle of all of this.
Tamanna, the RBI is not willing to give such an assurance. How can I? So we don't. You see, there are several separate things. In the case of Yes Bank, there is a personality who has created a bank which is aggressive, which expanded its loan book at a time when the economy was going through a slowdown, expanded its loan book at a time when other banks, well-run private sector banks, were not expanding their loan book as aggressively. A lot of these loans, as the figure, bad loans, as the figures have come out, have been to entities that have now, been found to be problematic, in trouble themselves. Now, which other, you see, because no AQR has been done of the NBFCs, so we really don't know, until defaults begin to happen, we will not know where the rot in the NBFCs sector really is. It's only when the defaults begin to happen, that those alerts and alarm bells will begin to ring. So as of now, it's very difficult to say where, in the financial system, outside of the banks for which the AQR was done, where the rot is and who all has what sort of exposure.
Yeah, and no, absolutely, Pooja, and that's something I think that the RBI is going to be more seized of than anyone else. It's tough to predict, but let's wait and watch and see what happens tomorrow when the moratorium lifts. 18th of March after 6 p.m. the moratorium for Yes Bank will lift. Depositors will be able to withdraw more than the 50,000 rupees that they have been stuck with for all of these days. Thank you so much, Deepak and Pooja. Always a pleasure to speak with you both.